Hey everyone, this is Steve Kick, mortgage loan officer with LMCU and a board member of the MMLA, bringing you another episode of the MMLA Connect Podcast. Today, I have a very esteemed guest, Brian Vieaux. He is the COO and president at Finlocker, correct?
That's right.
Author of Rethink Everything You Know About Being a Next-Gen Loan Officer, and social media guru. Yep, I have my copy right here as well. Of course, I got to represent for that. Been quite a phenomenon there. But Brian, I am so excited to have you today. I know you're a busy guy. You're doing lots of things on social media. You're doing lots of events, a lot of conventions right now. So I appreciate you taking the time. And honestly, this podcast wouldn't be happening right now if it wasn't for you. You threw my name in the ring earlier this year as a part of the MMLA meeting that we were in. I'm very appreciative of that. But I'll let you get into talking about your career. You've been in the business for a long time. So tell us, how long have you been in the business and where you've gone and what you're doing now?
Sure. So my gray hairs probably will, indicate the length of service, if you will. I started in mortgage banking in 1991. Just got married. We got back from our honeymoon. Before we got married, I was doing, I graduated college and I was doing construction for a home builder in East Lansing and making, getting paid under the table. Life was good, right? Not a lot of worries. We got back from our honeymoon. My wife was a substitute teacher at the time, and her dad ran a car dealership. He was an entrepreneur, right? He's self-employed. And one of the first things he said when we got back was, okay, now you need to get a job with benefits. I'm like, what are benefits? What are you talking about? He's like, let me say it a different way. My daughter is going off of my insurance and you guys need to figure this out. And so, getting paid cash under the table from a small mom and pop home builder didn't provide benefits. And so I started, what most people did back then is I put together a resume. It was limited, obviously. I just graduated college, and there was no LinkedIn. There was no Monster.com or Indeed or anything like that. So it was the old school. Take this resume, drive around to businesses, and leave it at the front desk. That type of thing.
Yeah.
And so I did that, and basically got a couple calls back. One of the calls back was from this company called Source One Mortgage Services Corporation. Never heard of them. Recognized the building because it was on 696. I know, driving by, I saw the logo on the building, and went in and did an interview. Like later that afternoon, I literally got a call back asking if I could come back in the next day for a follow-up. And before I left, they asked if I could start the following Monday. And so my first job in mortgage was for $15 an hour with benefits. And, my task or my job was to call back people. I didn't even know they were borrowers yet, but call back people. And I had these little sheets of paper, and it basically had their name, their phone number, and a number with a percentage after it. And so the percentages average like 12 to 16. And so I would call these people and say, if you could lower your rate from read paper, 12.5% to 10%, that was the par rate back in 1991, would you be interested? And if they said yes, I put them over to the right. If they said no, I crumpled it up and threw it in the garbage can. So I was like, I was the modern day CRM/dialer when I started in the business in 1991.
Boiler room stuff, right?
That's it, man. Yep.
That's awesome.
Yep. So, 1991, November of 91, par rate somewhere in the 10 handle. And then right after the first of the year, we started to see the interest rates start to decline, from 10.5 to 10 to 9.5. And Source One was at the time, the second largest Ginnie Mae servicer in the industry. And so we were basically doing servicing, retention, refinance of our book, right?
Yeah.
And we went from a team of two of us doing what I just described with a team behind us of 5 loan officers to all of a sudden we needed 50 loan officers and a whole bigger team of these people to call. And so I was promoted in my first 3 months to a loan officer position. And then we kept growing, and then a team lead. And so I was very fortunate to be in a place where we were growing so fast that I don't think my skill set was necessarily why I got promoted as much as it was, I was there and
necessity.
Yeah, I knew where the kitchen was and that kind of stuff. And so I went from like, by 1993, I went into a management position and have been in leadership roles in the industry ever since. And I've spent my entire career in and around mortgage. The last 5.5 years, I'm supporting the primary mortgage origination space, through my work here at Finlocker on the technology side. So yeah, I'm a career mortgage guy.
That's pretty cool. Started from literally the bottom, if you will, and way up, right?
Yeah, I mean, I guess a lot of people talk about starting in the mailroom, right? I don't even think I was qualified enough at the time to work in the mailroom. So,
yeah. Well, coming from another person who, started kind of, at the bottom, I started as a teller at LMCU. And I wouldn't say that that's the bottom. I guess that's the wrong term, because tellers are the face of any bank or financial institution or credit union. So appreciate all of my tellers out there. I've been there. But yeah, I mean, that's where I started as well. So it's like, this progression, and it does give you, a more healthy idea of what it takes to get somewhere, right? When you've actually worked through the progressions of working, if you will.
Yeah. The stories I love in the industry are, especially on the financial institution, the banking, credit union side, are folks in senior leadership roles that started as a teller, right? There's a ton of stories out there, real life cases where the CEO, their first job out of college was the teller at the local community bank. And so I love those. I love those stories. It just gives everybody hope, especially young people kind of coming out of college and entering the workforce.
Yeah, I think it's tough these days to, look at the long-term picture with instant gratification, and stuff like that. It's hard to picture yourself, okay, I'm going to work here for 10 years or 15 years and work my way up. I just hit my 15 year at LMCU, and, it's kind of a crazy thing to imagine yourself being somewhere for that long. But it's also like, hey, the University of Michigan has this slogan, "Those who stay will be champions." And, I like to think of that at times where, hey, like when you know you have a good thing, you might as well keep sticking with it, right? So
totally. I love it. You're a part of this unicorn class of people in our business that have, literally been with the same company for, like you said, 15 years, which is, I love it. I think it's awesome. I think it obviously speaks a lot about you, but it also speaks a lot about the power of the brand of LMCU and the culture for someone like you to be there that long.
Well, I appreciate that, and to come from someone as esteemed as you, that, I don't take that lightly. So thank you. But this is about you, Brian, not about me. So let's get back to it. So you're the COO and president of Finlocker. Tell us what Finlocker is up to and what you're doing for them.
Yeah. So I am super passionate about educating consumers, especially early journey, first-time homebuyer consumers, or said another way, younger people that are younger in their financial life. I'm really passionate about the value of educating them on home ownership, right? And so, because I don't lend anymore, and I can't really be the point person, if you will, for that consumer through this education, I'm excited about providing tools through lenders like yourself and like LMCU that help nurture and engage and educate those early journey first-time homebuyers. So really quick, if you think about personal financial apps and tools that exist in the marketplace, whether it's mint.com, which doesn't exist anymore, or Credit Karma, or Rocket Money, or even tools like Zillow, Redfin. If you think about those features where consumers are engaging with those tools, we basically built an app that combines many of those features I just described at a high level. And then we put on top of the tools this homeownership preparation journey that leverages information and data that comes from the user using the credit tools, using the budgeting and goal setting tools, things like that. And then our secret sauce, frankly, is how we interact with the lender that licenses our product and the loan officer that uses it as a top of funnel educate and engagement strategy. So we're all about early education, early engagement, and really what I talk about a lot is scaling the great work that local loan officers do at educating their community on the benefits of home ownership. We like to think that our tool allows a loan officer to scale their ability to help more people for a longer period of time through that nurturing process.
Absolutely. And me being a loan officer for a little over 12 years now, I understand why it's important to nurture early first-time home buyers. Can you explain to us why it's so important for a loan officer who's looking to build a business that thrives for many years, why first-time home buyers are a great place to build that business?
Yeah, I'm going to start first on why I believe that the local loan officer is so important for that cohort of home buyers, that early first-time home buyer. So if we agree that the average first-time home buyer, especially the average first-time home buyer who's maybe 18 to 36 months getting, not even ready yet to buy, if we look at that individual, that cohort of consumers, by and large, they've not yet amassed enough assets in their life to have like a private banker, a financial planner type relationship, right?
Yeah.
And so if we also believe and agree, and I think we do, that most likely when they do buy their first home, that home will become their largest asset in their personal portfolio. And then the corresponding loan against the home will be their largest liability on their personal balance sheet. Who better to play that early financial advisor role than a local loan officer? And for the most part, most loan officers have been in this business where they're there when someone raises their hand and says, "I'm ready to buy now," right?
Yeah.
And a lot of times that happens through referrals with their realtors and other professionals in their community. I still think that's a beautiful relationship, and those are very important. But most consumers that need advice aren't raising their hand to say, "I'm ready now." And they're not even raising their hand to say, "I want to learn." And so what I'm advocating is that loan officers become more visible and more active in their communities for those folks that are not yet ready to raise their hand to buy today, and become that local trusted advisor around home ownership. And absent technology like I just described with Finlocker, it's a little bit harder, I think, to connect the dots with that. Being the educator is one thing, but putting it into action and having this engagement that happens around that consumer's financial life while they're taking 6, 12, 18, 36 months to get prepared, I think it creates some stickiness. So now, why should loan officers think about having, I kind of think of it this way. If I was a loan officer today, I would always carry a pipeline of prospective first-time home buyers that are 2 years out from being ready to buy. And in my mind, I would always want maybe 30% of my business in a particular calendar year to come from that nurturing pipeline. And why is that? The why is that there are more and more of these tools that consumers have access to early in their life. Mint.com, Credit Karma, Rocket Money, these are all lead aggregation tools. And so it's going to get infinitely harder for a loan officer to have the right to win business for a first-time home buyer if they haven't been involved in their life helping them prepare. That's just one of the things I believe in. And I don't believe that the referral business ever goes away. But if we believe today that maybe the average loan officer gets 80% of their business through traditional referrals from agents, I actually see a world where most loan officers are going to be what I call hybrid, where maybe half of their business comes from those traditional referral sources, and then half comes from their own personal brand in their local community, where they're the brand, and then they're turning those relationships into referrals to their agents, right? And so that's a big thesis that I believe in, and I'm seeing it happen, especially with loan officers that are taking to social as well to kind of build their personal brand.
Well, I can attest to that. I'm doing the things that you're talking about right now, and being an educator and trying to get out there. And it's not even just for me. It's not just home buyers. It's also educating real estate agents and referral partners too. But the education piece is so big, right? If you can show that you care and that you want to help people, whether there's a gain for you or not, right? We're talking about budgeting and, figuring out, are you putting money in your 401k? Is your company matching it? Why are you not doing that, right? Things where you truly are helping people make financial decisions very early on in their careers, if you will, or and helping them, and maybe even introducing them to a financial advisor, right? Hey, they can help you budget better than I can help you budget, right? So, just having those introductions and those referrals, but being that voice that people can go to that knows that you're a local expert is huge, right? And people, you said you picked up your phone, and that's where people are people are going to social media, and they're going online before they find a loan officer, before they find a realtor, before anything, right? They're reading reviews, they're looking at things. And I know you have talked about this, but when we do videos, that's a one-on-one interview with someone, and they can watch that 24/7, right? I mean, it doesn't have to happen during business hours or normal hours or whatever. So that segues into our next point here, I think, is you're a huge social media proponent. You're very active on social media. Tell us why you do it and why you think it's so important for loan officers to do it as well.
Yeah. So my why is probably more out of necessity. Finlocker, when I got here, Finlocker was very much in a startup mode. And, we hear bootstrap, all the time. We truly were a bootstrap company. And we committed early on that we would put as much of our resources into product development as possible, which left us limited resources to build brand awareness and truly market our product to the industry. And so one of the I guess assets that I brought to the company when I joined was I already had a pretty decent following on LinkedIn, and most of that following was in the mortgage industry. I first got on LinkedIn in 2008. Early 2008, I created my profile. And that was basically, I was at a company that no longer exists. We were ultimately seized by the FDIC. We were part of the meltdown, if you will. And one of my colleagues sent around an email to the entire company and said, and this was early in the year, we kind of knew what was going to ultimately happen. It was like, hey, create a profile here. This is where we can all stay connected. And LinkedIn was brand new at the time, right?
Yeah.
And so for the first 10 years on LinkedIn, I didn't really do much with it because it was still very much a find a job, hire somebody kind of platform.
Yeah.
And then in, I'll say 2015, 16, 17, I started to do a little bit more in terms of putting content on LinkedIn. I was at Flagstar Bank at the time. And at the time I was trying to help us build our brand at Flagstar in the TPO channel for 2 mortgage brokers and small IMBs and others that might sell us loans. And what I found just dabbling in it back then, and when I say I was putting content out, like once every 3 months, I might do a post back then.
Yeah.
And none of it was video. But I would find that people would actually engage, not at any kind of scale, but there would be some engagement. Well, when I got to Finlocker, I had about 12 or 15,000 connections on LinkedIn, most in mortgage. And so that became our most effective way to put the word out to the industry of who we were and what we're trying to do. I've since grown that to over 30,000, like 33,000 followers, 30,000 connections. I'm maxed out for connections on LinkedIn. So I actually spend every week like cutting people that maybe aren't in the industry so I can connect with others in the industry. But I think this will bring it to light. I just returned from a conference in Dallas, and at that conference, I can't tell you how many people came up to me, and said, "I love your content. I love what you're doing. I'm a big supporter." And most of these people I'd never met. I kind of knew them by name only. And what was fascinating was that probably 70% of the people that came up to me and said that never engage with my content. No likes, no comments, no shares, no reposts. But what it told me was they're there, they're listening, it's resonating.
They're reading.
And two of those conversations turned into like pipeline type conversations for the company.
Yeah.
And so I'm doing it in a B2B manner. And what I encourage loan officers to do is take their hyper local, community-based persona, brand, knowledge, expertise, and share it with the idea that you're really sharing it in your community. But we all know there's no boundaries on social.
Yep.
And so more people are going to see that, and don't get discouraged, and don't let the vanity metrics, be your gauge for why you put content out there. Always trust and know that somebody is seeing and benefiting from the content you're putting out. And you may not know or realize the value of that for some time down the road, but just always trust. And if it's just one person that you're connecting with that's benefiting, would you not have that one-on-one conversation if you had an opportunity?
Right. And I can personally attest to what you've helped me do through social media, which is, we can, I don't even know how and why we originally connected on LinkedIn, but we did, and we kind of started following each other and whatnot. And then a couple months later, I show up to a state board meeting for the MMLA, and there you are in the room. And I'm like, I never met you before, and, didn't really, you're on the other side of the state, and you're traveling around the country and doing your thing. And for lack of better terms, I'm a local loan officer, right? I'm in the trenches, writing loans. So, I don't think a lot of loan officers get out much, if you will, because of that. And that's kind of my segue into maybe the MMLA and what that's done for you. Because the MMLA has done huge things for me. This podcast is one of those things, you throwing my name in that hat, and also the fact that we met on social media, kind of crazy. And now we're doing these things together. You helped me with this podcast here in many ways. So, but tell us, why are you involved, Brian, with the MMLA, and what made, you've been involved for a long time, but what made you reinvigorate that involvement?
Yeah. So, I think my first experience with MMLA, and it wasn't even the MMLA by name back then, was probably in the early to mid 1990s. The company I was with, Source One Mortgage, one of our executives was the president of the association. And so, I remember going to my first, conference or event, back then, and connecting with, first of all, my life back then, I never thought of mortgage beyond our little department in this single company, right?
Yeah.
And that first time going to one of the Michigan mortgage lenders events, again, I think it was the Michigan MBA back then, Michigan Mortgage Bankers Association. It opened my eyes to the industry being much bigger than my little department inside of this company, right? And I got to meet people like Hugh Ross, right, the founder of Ross Mortgage, and then of course met Tim through that, and so the Calcaterras at Town Mortgage. And so all these like legendary people in the industry who are also legendary in our state here locally. I'm born and raised, always been in Michigan. And then I went to work after we were bought by Citibank. And then for probably a 10 to 12, maybe 13-year period, I worked for companies headquartered outside of Michigan where, you know, where I probably should have, in retrospect, stayed more connected to the association. But most of my activity in business was outside of Michigan. And it was when I ended up going to work for Flagstar in like 2012-ish that I got more involved, but not directly, not directly as I should have even back then.
Yeah.
And it was like a year and a half ago, I got a text one day from AJ at Gold Star, and he's like, "Hey man, I got a favor." And I'm like, "Oh, anything for you, anything for you." So we got on the phone, and he was sitting in a board meeting, and at that point asked me if I would, join the board for the upcoming term. And I thought a lot about it because I do and did have a lot going on. But the one thing that hit me was that I owed it to our state and to people coming into the business in our state and to just the community at large to give back directly, because I have taken a lot from the association over almost 30 years. And so for me, it was really the impetus was AJ reaching out, which I appreciate, but it was really became wanting to be part of giving back to not just the industry, but those in our industry that are here in our state. And, people aren't paying attention. Our state's pretty important in mortgage. There's some big companies here.
Yeah, we got some big dogs over in Detroit, Metro Detroit area, and even, the company I work for, we're the largest credit union in Michigan, and we're one of the largest lenders. So, we do have some punching power when it comes to the business. So
absolutely,
for anyone who's out there thinking about maybe joining the MMLA, this is this is us telling you should do it, right?
Yeah.
Because the connections I've made as well, like, again, me and you have met through the MMLA and continued to have a relationship through that. But really, the amount of connections that I have because of being in the MMLA versus I can't even imagine it, right? It's completely different. Especially meeting the people on the east side of the state or up north, we have a lot of really great members, and everyone is dedicated to giving back and providing value to others, regardless of whether or not there's a financial gain. So, I mean, it's been a pretty great and close association to be a part of, Yeah,
I mean, here's the way I think about it. If you're watching this podcast, you're probably in the mortgage industry.
Yeah.
And you're probably in the state of Michigan. And if you are thinking about, if you're in the business today and this is like your career, this is where you're going to, work in terms of industry. There's more to the industry than maybe in your company or in your department in your company, and frankly, even beyond the state of Michigan. And so what I love about state associations in the MMLA in particular is not everybody that's in mortgage is going to have the opportunity to be at a national convention where the Mortgage Bankers Association is, sharing key updates and legislation updates and things that impact our industry and, most importantly, impact the consumers we all serve. And the MMLA becomes that conduit to everybody in our industry. And so one of the reasons I wanted to be part of the MMLA as a board member was to try to help grow the number of loan officers in particular that join the MMLA. And my plea, I guess, to all of you loan officers that are out there, and it doesn't matter the channel that you're in. It doesn't matter the type of institution that you're in. If you're in mortgage, we're all together. It's all of us together in mortgage, and we all are we're here to serve the consumer at the end of the day. And so as a loan officer, think you owe it to the consumers we serve, to be the most knowledgeable, educated consumer advocate as possible. And one great way to get that knowledge and education around the industry is to be part of an association like MMLA.
Absolutely. So many great things. And your voice has been huge. We're so happy to have you. So let's talk about it. It's behind you right now. But
there it is.
Yep. It's become a social media phenomenon. It's become a phenomenon in general. You and Kyle Draper, I think you guys connected via social media to begin with, right? So, I mean, this book was spawned out of social media. But tell us about the book, what it's about, and, kind of what it's done for you. And even with the MMLA, we've had the opportunity to listen to some of the other contributors speak, and you guys bring people in, but it's really helped shed a light on the MMLA, as well as obviously what you have going on in the book and in the industry.
Yeah. So a year ago, I got a package in the mail, which was this purple book. And I got the book in the mail from somebody who I had never met, did not know, didn't even recognize not just his name, but the company he was with. And, I rip open the package. On the front of that purple book was a QR code. I scanned it, and it's a video. It pops up, and this guy basically says, "Hey, Brian, I love what you're doing on social media. Love the message. Keep on, keep it on," that type of thing. I thought this book would be interesting to you, and maybe it helps you out like it helped me. He never asked for a meeting. He never, there's no call to action to do anything with him. It was literally him sharing this book. And so, I read Kyle Draper's first book, the purple book there, and now that it's known as that. And there was a lot of awesome stuff. The book's called Rethink Everything You Know About Social Media. I was active at the time in LinkedIn, but always a student of the game, as they say. And I picked up some awesome tips in that book. And so I started screenshotting pages of the book and posting on LinkedIn with my own kind of comment. It was like a virtual book report.
Yeah.
And after like 2 or 3 posts, I get this direct message from Kyle. And by the way, I requested to connect with him. He didn't accept it right away. I'm not sure about that. But I get this direct message. He's like, "Hey man, I don't know who you are, but," and I'm like, "Oh, he's not happy that I just gave away his entire book on my LinkedIn post." He said, "But your posts have blown up my inbox. And I just want to say I appreciate that you're taking the time to share, my message." And he's like, "Do you have 10 minutes that we could jump on a call together?" Absolutely. So we did a 10-minute call that turned into a 90-minute conversation. And I learned in that call that Kyle, his vision was to take what he did in this first book, Rethink Everything You Know About Social Media, and create a series of Rethink Everything books, kind of like XYZ for Dummies that exist out there. And so I thought that was like such an interesting concept. And so we went our separate ways. And I don't know, 3 or 4 days later, after sleeping on this, it hit me. Especially where I was sitting in the business, my first idea to Kyle was I have the idea for the next book, Rethink Everything You Know About Serving the Next Generation Home Buyer. So that was the working title that I had in my mind. But the idea was the audience was the loan officer, right? Helping them rethink how to best serve the next generation home buyer. And then that morphed into Rethink Everything You Know About Being a Next Gen Loan Officer. And probably one of the most important aspects or thoughts around this next gen loan officer in my mind was that this is not an age thing. This is not about the next gen loan officer, meaning the current 20-something, 30-something loan officer. This is about resetting the mindset of all loan officers, regardless of age and tenure in the business, to really literally rethink, how am I going to win for the next 5 to 10 years serving this next generation of home buyer that continues to come into the industry. And so the other thing that both Kyle and I recognized early on was, at least I recognized, that there's not a lot in my experience that people want to read about. it had been 25 plus years, almost 30 years since I directly originated a loan. But one of the benefits or values that I brought to the table was this network of people that I respect and know, and who I believe have something to share. And maybe they didn't have a whole book in them, but they had a chapter at least. And so we decided early on that this would be a collaboration. Initially it was going to be 12 to 15 chapters. It turned into 37 chapters, 37 people that all said yes, one of the things I say is like these people were so selfless in what they wrote and shared in the book. They shared the good stuff. Like some of the secret sauce for each of them was shared in their chapter, which I thought was so amazing. And so now, as you said, like, what has this done for me? It definitely has helped my personal brand in a massive way. I've spoken on stage here since we published in March. It's created new opportunities to talk to people who I'd looked up to in the industry. And so I would encourage anybody that kind of has it in them, that thinks they have something that's of value to share. Maybe it's not in the form of a written book, but this is, again, where putting yourself out there and sharing your best stuff on social, there's a value there. You may not see it right away, but it's there, and when it hits, it's going to hit in a big way.
You said a couple of things there, or there was a couple points I wanted to talk about. First, the secret sauce. I think it's so important, and it's so wonderful to hear you say that people shared their secret sauce, because I think for the longest time there's been this mentality of, I don't want to give away my trade secrets because then someone's going to be a better loan officer than me, and it's just that mentality that we need to get over, that, you get out of things what you put into it. So when you put out into the universe that, you want to help others, well, they're going to help you tenfold, right?
Oh, yeah.
So I love that, these loan officers and the other contributors wasn't just loan officers. Right. It was, other people from the business. But they're sharing their trade secrets, if you will. And that's just super impactful. And I think that's why the book has been so successful. And secondly, I think when you look back on it, you released this book, you said about we
published it in March of 2024.
Talk about coming out at the perfect time. I mean, our industry needed this book, right? I mean, we needed something to uplift us and something for everyone to, especially the seasoned loan officer that had been beat down, right, by the business. And, me being in it for 12 years, last year was the lowest volume I've ever closed in my career, including the first year that I did mortgages, which I wasn't even closing loans until like 6 months into the year. Right. Not everyone had a good year, and it was rough for the business. So, man, this book came out at the perfect time. And I think that's part of the reason why, everyone wanted to give back, but the industry needed that book too. So pretty cool to see that.
Yeah, I love that. And I appreciate that. And some of the best conversations I've had were with some of the contributors, many who are loan officers who, like, just recently, this week at this conference, I got this massive bear hug from one of the contributors. And he's like, by you asking me to participate, it's literally changed the course of my career. This is what he said. Because he's now got exposure, to other people, other parts of the business. But beyond that, he just said, like, the confidence level for him, it's one thing to think you've got it figured out, but it's another thing when you share and people are validating that what you're doing is impactful. And he's experienced that through this process. So it's pretty wild. And I think what it speaks to is, before we hit record, we were talking about just some of the industry stuff that still exists out there across channels. And I do think we're at a time, and not to make this political, but I think we are all kind of tired of this divisiveness, not just in our business, but just in general. And I think people are genuinely looking for ways to collaborate and create community. And if our green book is part of that, then that's pretty cool.
Absolutely, man. It's been awesome to see it, and I'm glad to know you and some of the contributors and get to meet more of them as we go. I've got some signatures in here. I'm trying to collect them all, because I love learning and continuing to be a professional, right? And that's always, a dedication to knowing that, you got to keep learning. So
yeah.
Love the book. And if you haven't read it, buy it, go get it. It's worth it. Great read, a lot of great points. There's social media QR codes in it, all sorts of great tidbits. So this is me repping the book for you. Rethink Everything You Know About Being a Next Gen Loan Officer by Kyle Draper and Brian Vieaux. So go get your book. I know I've taken up a lot of time here, but one last thing, Brian, before we end the podcast. I ask every guest on the podcast here about one thing that you can leave the mortgage industry positively. So tell us something that, will give us hope or something we can look forward to in the industry.
Yeah. I mean, I think this is probably super evident and super obvious, but a lot of times we get lost in the grind. We are doing like amazing work for families, right? What we do is provides the ability for families to have home ownership, and the impact that owning a home has on, personal and generational wealth is not to be understated or taken for granted. It's easy to fall into the grind of, underwriting conditions and turn times and, inventory and affordability. But at the end of the day, what each of us does is very impactful, not just to an individual home buyer, but the economy at large. And so just take time to, think about that every now and again. One of the things that, and you said this, and so I never say this again, don't ever say you're just a local loan officer, because that's selling yourself short, man. You're changing lives and you're helping change communities. And that's why we're here.
For sure. Ryan, thank you so much for your time today. Hey, if you're a loan officer or you run a mortgage company and you're looking for something to make your company, the next best thing, check out Finlocker. And if you're looking for something to inspire you or just trying to figure out, where your next best move is, purchase the book, the Green Book. It's a great read. It's an easy read. Get through it. But Brian, thank you for your time today. Thank you, listeners, for listening to the MMLA podcast, the MMLA Connect podcast. We appreciate your time. Thanks, Brian.
Thanks, Steve.